Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 11th of September, 2018, getting on to 4:20 p.m. Central Daylight Time. Gold up a little bit at the expense of just about all the other metals. I know I was doing reports today with Bloomberg on the copper, telling them, how can you be bullish to copper when you've got all these situations going on in trade with China? And I think that becomes the biggest issue, just how embedded we're getting into the president not wanting to deal yet with China. He wants to knock off, if he could, and when I say knock off, it's not a negative, knock off a deal with Canada. Canada tonight gave in a little bit on the dairy. We'll see what it means as the market goes on. That's been a big issue. Then, of course, Europe is waiting in the wings. Put our trade partners with us together. A lot easier as a block to start talking to China, and that's where I think you're at. But this gold market, it's acting impressive, and I'm going to show you. It hasn't broken out to the upside, but it's also not breaking anymore. If you take a look, you've gone from 1353 to 1161, you bounced, and you just sort of stalled here against the 1190s on the continuation of closes. When you look at the December gold on the daily bar chart, you made your deepest break, and you came back and you closed higher. Now, what else? Yesterday's high was 1209 to 1202.40. Today you got to 1210.10 to 1198.50. So you have an outside day. What would be bearish, let's first approach that, would be taking out today's low. Why? That would set up what I call a bull trap. And when you set up a bull trap, several numbers come into play. Remember what I just said, and let's go to the next chart. You do have a pattern of lower highs and lower lows, which is bearish. The 18-day average is where the market is fighting a battle. It literally began 1, 2, 3, 4, 5, 6, almost 2 weeks ago, this battle began. And you keep fighting it right here. Now, what I just told you is important from my perspective as a chartist. If you take out the low of an outside day up, I call that a bull trap, and often prices will make a move to the closest of a major moving average or a Bollinger Band. Well, the major moving averages are above the market, so it's not going to be that. Where's the Bollinger Band? 1184.30. What's the negative with that? You would be taking out this low I've been telling you of 1189.50 that I don't want to see taken out if what we call a traditional price count, as our firm defines it, is going to march up prices. Don't know that that'll happen, not saying it will, but this is the setup. A high, a break low that doesn't take out another low, then you're moving higher after a prolonged break. That is the setup that I look for. Battleground right where it should be. If you were to take out 12.70, about $10 higher, I would put the 12.19.40 area as the first resistance, and believe me, it's in the 12.30s, 12.40s that I have the next resistance on some other work. If I look at the chart in terms of momentum, it's confusing. You have momentum down, bias up because you closed over the 18-day average, and the swing line down. It's a mess. It's that simple. I wish I could say more. When I come over to GLD, the important ETF of gold, you've got the lower highs, lower lows, and just like the futures, you settled over the 18-day average. Momentum is still on the downside. Identical picture. When I come to GDX, the gold miners, I have the embedded reading. That's where my eye goes. The most important thing when I look at a chart is it embedded, oversold, overbought? My eye just goes there after doing this for so many decades. Until that red line's over 20. This market on rallies, in my opinion, still gets sold. So I don't have anything bullish on this chart. Also notice it refuses to get under and stay under the lower Bollinger Band. This is called riding it. That's a very bearish formation. When I come to the gold-silver ratio, as a traditionalist, I normally look for the gold-silver ratio to go the other way when you're trying to bottom metals. I'm not getting that at all. So therefore, my argument for the gold, I like what I see, but I certainly, I've got a lot of trepidation about telling anybody to get into that gold market. In the silver, you went down again today. If you take a look, you got to 1396.50. The lower Bollinger Band was 1397.90. Hit it and you bounced. You didn't close higher. If you took out 1428.50, what would happen is you'd break the pattern of lower highs and lower lows. What about the slow stochastics? Well, today both numbers are under 20. They were under 20 yesterday and the day before. So in this market, you have an embedded reading. Embedded readings, if the red line gets over 20, it puts into play the possibility and the probability that price and the 18-day average of closes will try to make a run at each other. Until it occurs, I say the bears have control of this market. In the copper, this is just an oversold market. Lower highs, lower lows. Now, you had an outside day down today in copper. So the flip-flop of the gold. If you were to take out today's high of 266.15, then I'd make an argument you're going to make a run to the 18-day average. First got to do it. Support in the market, the lower Bollinger Band, 257.75, missed it by about 50 points today. In the platinum, notice the battleground all of a sudden that is shaped up. So often, if you're a regular viewer, I tell you, this 18-day average is my line in the sand. It is where markets decide to do something. In addition, you've brought together the two black dashed lines, the Bollinger Bands. The market is no longer moving up or down. It's spinning like in a pipe, building momentum for a move. The question is, which way will the move be? At the moment, you have higher lows, higher highs. The market closed over the 18-day average and momentum's up. The bulls have grabbed control for the moment. If they can keep it, 806.20, the next target, the upper Bollinger Band, is one of them. The market that I told you I think is weakening, I said it yesterday and I'll stay with it right now, you still have the embedded reading, so until that's lost, it isn't lost. But it acts like a market that wants to lose it, and it acts like a market that wants to give up all the gains, let me say that right, some of the gains that it was making against all the other metals as it's running out of momentum. I'm not saying it's turning bearish. I am saying it's lost its way. You now have a market with a lower low and a higher high. You're a hair's breadth from getting this number, the red number, under 80, and if that happens, the first objective could be the 100-day average at 944 with the secondary at 933. In the dollar index, look at how the battleground is again at this 18-day average of closes. And as that's happening, you're bringing in the Bollinger Bands. It's a market that is spinning its wheels looking for direction that it doesn't have just yet. I want to remind you all, if you did not get my invite to my webinar, you want to call my staff because it's going to be tomorrow at 12:30 in the afternoon. Got that? 12:30 tomorrow. I open up the webinar and away we go. You bring your questions and all. But you might also want to get our information. You know, if you're a grain trader, tomorrow's a huge day in the grains and we get a key crop production number report. And of course, we've got that hurricane right off the coast that is waiting to do damage to God knows what in the country because it's supposed to come in and sit and really rain over already rain-soaked areas. But we'll be also talking about what's going on in the world, events with trade right now. We cover all that. So how do you get it? Give us a call. You can go to our website, www.iraepstein.com, and you'll see a carousel of free offers. Click it. You can click up here at any point, and we'll make sure everything gets to you. I'm Ira Epstein. You have a good day.